All right, let's dive right into this explainer. We are going to deconstruct Skillsoft's latest SEC Form 10Q to see exactly how a massive corporate restructuring ripples through a company's bottom line. If you've ever wondered how companies handle the really complex accounting of selling off huge chunks of their business, you are absolutely in the right place. We're going to get under the hood of their financials for the quarter ended April 30, 2026, and translate all those dense regulatory filings into a clear, easy-to-follow story.
Wow. Okay, we're kicking things off with a number that practically jumps off the page, a $43.1 million net loss for the quarter. Now, when you're looking at a major player in corporate learning and talent development, a loss of that magnitude immediately makes you ask, what on earth is going on behind the scenes? Is the core business actually struggling, or is there a much bigger strategic puzzle being put together here?
To figure out what's really going on, we're going to peel back the layers. Here is our roadmap. First, we'll look at the big financial picture. Then, a major strategic shift, followed by the cost of divesting. After that, we'll dive into Skillsoft's core business, and finally, look ahead at their restructuring.
Okay, part 1, the big financial picture. Let's see how Q1 of 2026 actually stacks up against the previous year. When you compare the numbers side by side, notice the stark contrast. On the top line, total revenues took a slight dip, dropping to $94.5 million in Q1 of 2026, down from $99.1 million the year before. So, a modest decrease, right? But look at the bottom line. The net loss actually widened by over $5 million, dropping from a $38 million loss in 2025 down to that $43.1 million loss in 2026. Usually a slight revenue dip doesn't trigger that kind of drop in net income. It tells us there are some massive internal gears shifting right now.
Which brings us right to part 2, a major strategic shift. This is where we find the real culprit for that widened loss. To solve this mystery, we have to talk about how accounting rules treat a company that's selling off a piece of itself. Skillsoft made the call to sell its Global Knowledge, or GK segment. On April 30th, 2026, they officially moved this huge segment into an accounting bucket called discontinued operations. And listen, this isn't just accounting jargon. It literally means this is a major strategic shift that fundamentally changes their financials. Because they're selling it, the rules dictate they have to completely separate the history of this segment from their ongoing continuing business.
And you can see exactly how this plays out right on their official balance sheet. There's a very specific line item carving out $53.1 million specifically as assets held for sale. Basically, that's the entire Global Knowledge business boxed up and waiting to be handed over to the buyer, which the filing notes is an affiliate of Enduring Ventures.
All right, part 3, the cost of divesting. Because as we're about to see, selling off a piece of your business is definitely not free.
Here's the kicker. Getting this asset ready for sale triggered some serious impairment charges. When you label a business as held for sale, you have to value it at either its carrying amount or its fair value minus the cost to sell, whichever is lower. For Skillsoft, that meant taking a massive $8.7 million non-cash hit just for goodwill impairment. On top of that, there was an aggregate $6.9 million valuation allowance impairment. That breaks down into a $6.2 million hit to definite lived intangibles and roughly $700,000 for property and equipment. Now sure, these are non-cash charges. They didn't literally write a check for this, but it absolutely hammers the reported net income.
When we pull the revenues and expenses specifically for this discontinued segment, the math is brutal. Global Knowledge brought in about $24.5 million in revenue this quarter. But when you factor in operating expenses, especially those heavy impairment charges we just talked about, the total expenses skyrocketed to over $47.2 million. So this single divested segment directly accounts for $24.4 million of the quarter's total net loss. Without this strategic sell-off, that eye-popping $43.1 million headline loss would look completely different.
Moving on to part 4, Skillsoft's core business. Let's see what's actually left after clearing the deck.
So, what is the remaining foundation? It's their Talent Development Solutions, or TDS segment. Skillsoft is betting the house on becoming the global leader in skills management for what they are calling the human plus AI era. They're building an AI-native platform to help organizations spot critical skill gaps in their workforce and actually prove that their training leads to real business outcomes. Essentially, they shed the old baggage to go all in on this AI-ready future.
If we break down that remaining $94.5 million in core revenue, it's incredibly obvious where their bread is buttered. Enterprise clients make up the absolute lion's share at $81.4 million. The consumer side brings in about $7 million, and professional services chip in nearly $6 million. The big takeaway here? Skillsoft's ongoing health is deeply tied to massive corporate clients paying for subscription software capabilities to upskill their employees. And that brings us to our final section, Part 5, looking ahead at restructuring. How are they physically adapting to this new, leaner reality?
Look, you can't just chop off a massive chunk of your business and keep paying for the exact same overhead, right? The 10Q filing details a multi-step restructuring plan to shrink their operating expenses so they fit this new model. In Q1 alone, they took $1.3 million in restructuring charges. This covers professional fees for the GK sale, workforce reductions, shutting down and consolidating facilities, and terminating old contracts. They are actively right-sizing the ship. Which leaves us with a truly fascinating dynamic to watch. We just saw exactly how shedding the global knowledge segment created a painful, though mostly non-cash, drag on their Q1 earnings. But with that heavy lifting done, the slate is essentially wiped clean for their new core mission. So, the big question is, with this structural pivot and a laser focus on their AI-native enterprise platform, how is this going to reshape their financial reality over the next year? Will this much leaner, hyper-focused Skillsoft actually deliver the profitability they're aiming for? Well, that is the million-dollar question we'll be watching for in their next filing.